Thank you for joining us today for our webcast on sales and use tax for contractors in the state of Connecticut. I'm Jeff Rogers. I'm a tax partner at Feely Driscoll, a Boston-based regional accounting and consulting firm. Should you have any questions following the presentation, please feel free to contact us at 888-875-9770 or visit us on the web at www.fdcpa.com. Contractors that are accustomed to doing business in the state of Massachusetts are often caught off guard when it comes to complying with Connecticut sales tax requirements. Specifically, Connecticut differs from Massachusetts in that they impose sales tax on both the cost of materials as well as the actual services performed by the contractors. Massachusetts, as we are aware, does not impose a sales tax on contractor services. For more specifics on Massachusetts sales tax requirements for contractors, please listen to our previous webcast, which can be found on our website or on our YouTube channel. Not all services are taxable in Connecticut, and we will get into a few exceptions in a minute. But before we do, I want to point out that all contractors, both generals and subcontractors, must obtain a sales and use tax permit from the Department of Revenue Service. They must register for this permit prior to providing any contracting services. When Connecticut uses the term services, what they're referring to is the actual labor charge, any markup or profit on the labor, any markup or profit on materials, overhead expenses allocated to the job, tool or equipment purchase or rental, and reimbursed expenses that are incorporated into the bill. In essence, the term services results in sales tax being imposed on the entire bill. As you can see, this differs significantly as compared to Massachusetts, where the contractor is considered the consumer and taxed on materials only at the time of purchase. Not being aware of this difference could have a major impact on the profitability of your Connecticut jobs. Now, as mentioned, not all services are taxable. This requires a review of the type of real property in which the construction is being performed. A quick definition of real property. Real property is land, buildings, and materials permanently affixed to the land and building. If the property being constructed can be classified as either new construction or owner-occupied residential property, then there will be certain services that are not subject to the sales tax. New construction would be considered the construction of a new building, construction of a new addition that expands the square footage of the existing building, and the replacement of the entire internal structure of the building. This is going to require the removal of everything within the interior of the building between the floor and the roof. We're talking floors, walls, support columns, electrical and mechanical systems, all have to go for the contract to be considered new construction. Owner-occupied residential property is used exclusively for residential purposes and has up to 3 dwelling units in the property, and the owner either resides or intends to reside in the property upon completion of the work. The following are a list of services that would not be taxable when rendered to either new construction or owner-occupied residential property. It is not an all-inclusive list, but this covers a fair amount of services. They're air conditioning, carpentry, carpeting, construction management, demolition, electrical, elevator or escalator work, exterior sheet metal work, flooring, foundation work, heating, masonry, painting, paving, plastering, plumbing, property management, roofing, sandblasting, siding, staining, structural inspection, ventilation, wallpapering, and welding. Site improvements could also be classified as new construction, and this would consist of the construction of roadways, walkways, driveways, parking lots, patios, in-ground swimming pools, tennis courts that put the property to a new use. To be considered new, the walkways and driveways and patios must be made of poured concrete or asphalt. These can be considered new construction even if the building to which they are connected is not actually a new building. On the flip side, there are many site improvements that would not be considered new construction. These would include septic systems, drainage systems, and outdoor lighting systems. None of these would be considered new construction unless the building that they were connected to met the definition of new construction. There are certain services, however, that are taxable in all cases, and this is regardless of whether they are for new construction or existing construction. Among these services are carpet cleaning, exterminating, house washing, janitorial, landscaping, maintenance, snow plowing, swimming pool cleaning, and window cleaning. I should point out that all this is laid out in a comprehensive PDF that can be found on the Department of Revenue Services website that is called Building Contractor's Guide to Sales and Use Tax. It is worth the read. As we are all aware, most construction contracts involve a general contractor and one or more subcontractors. This can lead to a bit of complexity when determining who is responsible for paying what for sales tax. The general rule is that the subcontractor is going to be paying sales tax on the materials to the vendor. As it relates to the services, the subcontractor and the general contractor can do one of two things. The general contractor can either issue the subcontractor a resale certificate on the services or not issue a certificate. If the general contractor issues a resale certificate to the subcontractor will not charge the general contractor sales tax for the services performed. What the general contractor will ultimately do is tax the owner of the company on both their services and the services of their subcontractor. Now, the subcontractor is still responsible for paying the sales tax on materials, and they must break out their invoice to the general contractor to reflect the charge of materials. If they do not break out the portion of the bill that relates to the materials for which they already paid sales tax, then the general contractor is required to charge sales tax on the entire amount of the subcontractor's invoice. When no resale certificate is issued, the subcontractor is going to charge the general contractor sales tax on the services. It's not even necessary for them to indicate what portion of the invoice is sales tax. They can simply write on the invoice, sales tax included on services, and this will fulfill their requirement. In this situation, the general contractor, when final billing the customer, will only charge sales tax on their own services. It is very important that both the general contractor and the subcontractor are on the same page as it relates to which method they've agreed to. We're going to move along to another topic that is the source of much confusion, and this is when out-of-state contractors are being utilized on projects in Connecticut. Connecticut has two classes of non-resident contractors. A verified contractor is a non-resident contractor or subcontractor who is registered for all applicable taxes with the Department of Revenue Service, has filed all required tax returns with the Department of Revenue Service, has no outstanding tax liabilities to the Department of Revenue Service, and has submitted a Form AU-960 to the Department of Revenue Service verifying that they've met these requirements. In addition, they will either been registered for all applicable taxes for at least 3 years or have posted a good and validated verification bond with the Department of Revenue using Form AU-961. And if you're not a verified contractor, then you're an unverified contractor. If a non-resident prime or general contractor has gained verified status, they will eliminate the requirement to file a surety bond with the Department of Revenue Service. A non-resident subcontractor who is verified will eliminate the requirement for the prime or general contractor under the contract. A general contractor that is working with an unverified subcontractor on projects over $250,000 must hold back an amount equal to 5% of the payments required to be made to the subcontractor until the subcontractor provides a certificate of compliance which would authorize full or partial release of the amount held back. Similarly, an unverified prime or general contractor must file a surety bond with the Department of Revenue Service in the amount of 5% of the contract price. The Department of Revenue Service will not release a surety bond until the contract is complete and the unverified prime or general contractor has established that they have paid all taxes that are owed in connection with the contract and that its unverified subcontractors have paid all their taxes that are owed in connection with the contract. This is how the process works when an unverified subcontractor has completed their portion of the contract. They can file Form AU-967, which is a request for certificate of compliance. The Department of Revenue Service will review the request, and within 160 days, they will either issue the certificate of compliance, which is Form AU-968, or they're going to deny the subcontractor a certificate of compliance and remittance of holdback with Form AU-970. If they issue the certificate of compliance, then the prime or general contractor who's been holding back the 5% can release the amounts to the subcontractor. If they deny the certificate of compliance, then the prime or general contractor must remit the total amount held back to the Department of Revenue Service. Similarly, if the unverified subcontractor does not submit a Form AU-967 to the general contractor within 90 days of the completion date, the general contractor is required to remit the amounts that are held back to the Department of Revenue Service. This will conclude our webcast on contractor sales and use tax in the state of Connecticut. If you have further questions, please call us at 888-875-9770 or visit us on the web at www.fdcpa.com. Thank you for joining us today.